Peter Warren is the co-founder and joint managing director of Finura Group, one of Australia's fastest-growing wealth tech firms. With over 25 years in financial services, Peter helps boards and executives rethink how technology can transform businesses. Beyond Finura, he serves as independent chair for McQueen Financial Group and Rising Tide Financial Services. Peter is passionate about building the next generation of advice technology, with Finura's mission to set a new standard for how advisors and wealth firms deliver for their clients. His leadership has positioned him as a respected voice in the industry, often called upon to share insights on the future of financial advice and technology. Peter is a proud family man with his wife Catherine and two young sons, Thomas and Patrick, and he values spending quality time with them as much as he does driving innovation in his professional world. Enjoy the podcast.
Peter, welcome to Everyday Heroes podcast by Kofkin Bond. Great to have you here.
Thanks, Tony. Pleasure.
Yeah, no, when you did walk in the room, I when I was looking at your website, I thought, geez, there's some familiar faces on that website. And it's and you actually are the chair of the McQueen Group, very good friends of mine. Gus, Alex, Dick, so Nawaki, so I've known for probably more years than Gus at least for more years than I plan to remember.
Yeah, it's a small industry. I think like many industries. I actually started as a client of that business
Is that right?
Long time ago. Yeah. So Gus quickly grabbed hold of me when I moved to Melbourne and said, "You need a good financial advisor," and he was right. And then he quickly passed me on to Nawaki, who was actually the good financial advisor. And I've been with the team ever since, and was fortunate to be invited to join their board about 5 years ago, and recently became the chair. So,
and I was actually quite surprised to see that you were their board and learned that you don't play golf.
I don't play golf. There's two key unique characteristics for me.
Well, Gus, of course, is about his golf course in Hobart.
Yeah, and we have some famous golfers as clients.
Oh, yes.
Jeff Ogilvy's a client,
Yep.
And we manage the Jeff Ogilvy Foundation as well. And that's a wonderful thing Gus is doing in Tasmania, very visionary as well. So that's occupying a lot of his time, but we don't talk much about golf at the board meetings these days, I can tell you.
Good to hear. Good to hear. You're a good chair then. Okay, you started your career actually corporate turnaround before co-founding Finura, who is as per the introduction, you are a tech-based firm looking after clients like ourselves, trying to make our life as easy as possible for our clients. But how do you go from doing corporate turnarounds to financial services technology?
Well, so where I met my current business partner, Aaron, was in a corporate turnaround situation. It was actually a financial services technology business that we were in.
Okay, yep.
So I've been in the wealth management industry for 22 years. My first job was a paraplanner. So like many, I started in that early role and worked my way through the industry but eventually wanted to be in the technology side. I'd always been fascinated with tech, and I sort of figured that it's good to pick career paths in industries where there's growth. And there's two industries I could think of: wealth management, superannuation, and tech. Even if you're just okay, the industry's growing quite strongly with you. So that was the logic. Yeah. So Aaron and I met in a business that was called Inzumo. It listed on the ASX a number of years prior, and sort of started making some aggressive acquisitions. And of course, we didn't think it was going to be a turnaround when we joined. Yeah. But within about a month, we worked out it probably was going to be, because listing in a business is, volatile.
Was Otto part of that?
No, that was pre-Otto.
Okay, yeah.
But it was, it has aspirations. It acquired Chant West, so it did acquire some very, very good businesses. But like any organisation, I think when you move from being a founder-led business to being an ASX-listed business with independent directors, it changes quite quickly. Yeah. And long story short, we joined that business, and it had some failed software projects which were sort of unraveling, and that unraveling was basically causing some serious financial losses for the business, and so some drastic measures had to be taken, and it was brutal. Founders getting exited from the business unceremoniously, lots of egg on face, lots of justifying things to shareholders. So I would say it was an absolute baptism of fire for Aaron and I, and probably taught us more.
How long have you guys been there at that stage?
We were only there for about 6 months when this all blew up.
Okay, so you would have been young too.
We were young, we were sort of I was in my early 30s. Yeah. And I think I still remember the day we went and had a Vietnamese roll, a banh mi, and we looked at each other and said, "Gee, what are we in here and are we staying? It was sort of the question we asked. And we decided
So
to.
is that a pivotal moment
Mm.
that really in your career is what actually changed your trajectory in a way, you and Aaron?
So, yeah, because the natural temptation would have been to just go back to something safe, go back to a bank, or I worked at ANZ
Did you
for a
have kids
period.
at that stage?
No kids.
Okay.
So that really helped the risk profile
Okay.
somewhat.
Yep. Okay.
And so I was probably clearer, like a lot of people, on what I didn't want. I mean, I exited those organizations because I knew what I didn't want to do anymore, which
Yeah.
was be in a big corporate. But then I knew that it wasn't all beer and skittles on the other side either. But I think what, I don't know whether it was a prisoner's dilemma that we were just stuck in it together. But we both agreed that if something great came out for one of us, that we would leave and the other one would support each other. But then very quickly, as time went by, we started to really like the staff and we started to like the clients. And then we realized, sort of through all the noise, there was a great business there beneath the surface. There's just some things hadn't gone so well from an execution point of view. And so out of all that, we turned the business profitable in about 18 months, got on a really good footing again. And, things actually went really well after that point. And I suppose really set a strong foundation for now what is our partnership, and it's now 10 years old working together, that I sort of figured, well, if we can work together in that sort of boiler room environment, we can survive a lot.
Yeah.
And when we sort of saw the best of human nature, the worst of human nature. So, yeah, I think it was a pretty pivotal moment. I was one of those moments in life I had to put my big boy pants on.
Yeah, it's which can suck at times. So it's no, it's especially when you're still in your early 30s and you remember what life was like at 18. So it's
Right.
so let's talk about advisors. We often struggle balancing client experiences and expectations. So we have to, as you're well aware, and as our clients are well aware too. So I mean, we have probably a good majority of our clients would qualify under the financial arrangements as wholesale clients. Probably about 90% of our clients or more we actually treat as retail. And the reason being is because they're actually not sophisticated investors. They still come to us for advice. So to sign them off as sophisticated investors is actually wrong as far as I'm concerned, because they're still coming to us for advice. We're still providing that advice. As a result, we have to, two things. One good thing for them is they have protection under PI. One bad thing for them is they have to get a statement of advice every time we recommend something. With bearing in mind, because we have our own SMA now and about to launch our own MDA, that's not an issue in respect to the funds management, so they don't have to go through the ROAs. But we struggle with, and all businesses, all financial services businesses, we struggle with not so much the compliance, you have to do that, but the execution of the compliance and getting everything done and getting it done efficiently. If a client says, well, can you just buy that for me? Yes, we can, but we have to produce this document. So as a result of that, so from that perspective, what are some of the things that you've seen in respect to the evolvement? So as things have evolved in our industry, but also in respect to, advisors who are trying to manage those expectations, and how you come in to try to make life easier for us at the same time.
Yeah, there's a lot in that, Tony, and you should have really highlighted. I think one of the big rocks that's been holding our industry back is getting that balance right. And full credit to you for still doing that with your clients. I think there's a lot of people that have purely apply a strictly financial measure to that, and I think I would qualify under that banner as well. And I certainly don't feel like I would fit that criteria. So I feel like that those protections are really important for a whole bunch of reasons, which recent news has only just echoed that. But what I would say is the trade-off is that we are a terribly inefficient industry, and a lot of things that have to happen by legislation are things that the client necessarily doesn't see or value. What they value is the advice and things that they want you there when they need you, and all those things are important. But unfortunately, we are where we are with regulation. And so what we decided many years ago was to sort of commit ourselves and our company to sort of solving some of those challenges from a technology perspective. A lot of the industry, its legacy is because it's been largely bank-owned financial planning groups up until the last 5 years in the Royal Commission. And banks could afford to be really inefficient and slow, and they provided all this technology for advisors. But that's all gone now. That infrastructure's gone. And so most financial advice delivered in Australia is by effectively small businesses. And no one has really built software, I think, with small business is in mind. And so we have sort of decided to operate in that environment. It's not without its challenges because, like all good professionals, advisors have found 1,000 ways of doing the same processes that they think are unique and special to them. But what we have to be a bit more focused on is the outcome, not necessarily the process. But I think the things that are bringing this to a head are that, as you rightly point out, the average consumer is very impatient. So our Netflix.
Well, I'm impatient. If I decide I want something, I want it now.
Yeah. So
Yes, I'm happy to pay for it. So can I just have it now?
if you were my financial advisor and you come see me, would you be happy to wait 4 weeks for a statement of advice?
No.
You would have forgotten about the meeting.
Correct. It's exactly right. So it's and that is exactly right. And it's actually was one of the issues with Count when it was CBA owned, and when Matthew and the team at Count Plus bought Count off the CBA, was I heard every single SOA had to get vetted prior to going out to the clients. I said, if that continues, I'm actually not part of this. I'm out.
And there's still a number of financial services licensees operating under that environment.
Yeah, that's right. So, but once again, it was that 28-day turnaround if there were no mistakes and nothing had to be changed.
100%. And so we talk a lot about what's that end-to-end client experience. And I believe, in 2025, where the world is amazing, that clients reasonably expect things within 10 days max.
Absolutely.
Max. Yeah. And that's not good enough in my opinion. But if we can get it from 4 to 5 weeks down to 10 days, we're doing well.
Absolutely.
Our Netflix conked out for the first time last night, and my wife started having kittens. It was a very inopportune time in the TV show we were watching. It was a very pivotal moment, and it's got that Netflix there's a critical error, please reset. And I said, darling, this has not happened in years. But it highlighted to me how impatient the average consumer is. So,
do you actually remember Netflix when it first came out and you actually had to download the movie and it could take an hour to download? And that's right. And it was just like, I was going to get a CD or DVD.
We are in a very instant gratification world.
Yeah.
And we expect things on our phone to work instantly. We've got used to 5G Wi-Fi. People lose their mind if the Wi-Fi doesn't work on the plane anymore. That wasn't a real thing until a couple of years ago.
Well, it's interesting. They're forgetting the focus of that there's this multi-ton metal thing flying through the air and they're worried about Wi-Fi. Not the amazement of actually being on this amazing thing that's actually flying through the air and keeping you safe.
It's suddenly become a right to have fast Wi-Fi on a plane.
Yeah.
And I fly quite a lot, so occupational hazard. And when the Wi-Fi is down, the number of times the call bell goes because people are losing their mind over Wi-Fi. I'm like, what is happening to society? So to bring that all back to why is this important for advisors? We believe that, rightly or wrongly, good quality personal financial advice is broadly a luxury service.
Yeah.
So what I mean by that, it's scarce, it's expensive, and it should cost money, because it's worth a lot to people in the long run. But you have to match that sort of luxury service with a really high quality delivery. And it's not just about the human face-to-face, it's every aspect, the technology, the way the whole process happens. So we've got a lot of work to do in our industry to get people off paper into something more digital. I think consumers have rising expectations because of the fact that their apps work so well and everything they expect, and yet we're behind. So we are spending a lot of our time as a business saying, what can we do to give advisors in small businesses or large much better tools and products to use for their clients?
Well, then what then differentiates you from, say, some of the big known brands out there and stuff like that? So where's your pivot point? What differentiates you? Why should a smaller firm say, I'm going to you, I'm not going to, I call them the Atari Space Invaders, but what I'm talking about. They just, so it's,
yes, we have two parts to our business. We have a
remember Atari was once the biggest thing in video games.
And if you still have an Atari, it's probably worth a lot of money.
I might have
64s as
I
well.
might have.
But so we have two parts to our business. We have a consulting services business and we have a software company.
Yeah.
And so, I remember when we launched our consulting business, my biggest concern was, companies don't really know who we are. They know me, but they may not know our company. Are we big enough? And what was interesting was around the time when the folks at PwC got into some trouble over how they ran their business.
Yes.
And that didn't just impact PwC. It actually, I think that stigma spread across all consulting Big Fours.
All Big Four suffered massively. Yeah.
And we went from a world very quickly where our perceived lack of scale or brand or history was an advantage.
Yes.
You know, that the people in those senior parts of organizations we were talking to, we have some very large clients who I never thought millionaires would be our clients. They like the fact they're talking to the person whose house and livelihood's on the line if we don't do what we say we're going to do. We don't have the luxury, Tony, of a big brand to fall behind if we don't do the right thing. It's my personal brand and reputation tied into this thing. So that is our advantage. And I think some of your other guests have had that experience in their businesses where they haven't had that necessarily, but all of a sudden, John from Vox, a great example, he's now getting some wonderful clients he's working with who never in a million years would he have thought 10 years ago that he'd be working with. But so I think that's helped. To the software side, it's our advantage. You know, the fact that, tech has moved so fast. And if you're a technology developer, you can do some pretty amazing things now in 2025 without any legacy. And so our advantage, and we won't always have this, Tony, it's something to think about, is the clean sheet of paper is a real advantage from a tech perspective. We have no tech debt, as it's called. And so
it's interesting you say that, though, because that's one of the things I said to Shay, who you know. I said to Shay, so we have a principle in here, DARES, everything has to be digital, automated, recurring, evergreen, scalable. And I said to Shay, because he's saying, well, what? And I said, Shay, what you have to understand something is I'm smart enough to know that I'm dumb at things. Okay, so I know what I want the end vision to be, and that's what I'm sharing with you. And you're now going to go and research out there. And I don't want you just going down, okay, these are the usual suspects. Is this who we have to use to get things to where we want it to be? You know, so I mean, my dream is to one day have what I call the live SOA. If we got all the connections and every bit of clients' information sitting there, that can be updated live. Trying to get an insurance company to even have an open API is just a nightmare. You know, so it's how many times we have to re-input all this information.
Absolutely. And that's a goal of ours too. And we're hoping someday we'll be able to show that to you.
Yes.
But I think, and so I think for us, it's not about capital or cash or any of these things. I think for us, it's about focus. And so what I would say is a lot of these large organizations who are often ASX listed, they've often acquired their way to growth. And you know yourself running your business, the more you acquire, I think the more you dilute your focus. And so we're not an acquirer of businesses. That's not our plan. We're a builder.
Yes.
And so we're really fortunate. We have a very small but very focused team. We do have some capital behind us, so I would have loved to be able to talk about who our partner is, but it's not quite. They're an ASX company, and we're not quite ready to release yet. But we do have some capital now coming into our business, which is going to really accelerate our growth. But we're not using that money to hire a bunch of people. We're spending it on development. And so I think we can do a hell of a lot with a small business these days if you use tech correctly.
Well, it's interesting to say that because I was speaking to two private equity firms out of the US who've always known very well and been sniffing around us for quite some time. And they said, well, if we were to buy equity in you guys and we could give you a convertible note and basically you can go up to 10 million bucks and you can go in there and acquire. So I wouldn't acquire anything. I said, our industry is actually shrinking. There's more need for our services over the next 20 years. I'm still a young, sprightly 56-year-old. So, but I've got a lot of younger people here as well. But I said, basically, it's a case of why would I acquire something where, you know, my diary's full 2 months in advance anyway? You know, just from referrals. So from that perspective, what I want is efficient technology. And what I want is the scalability in DARES is 20 of me out there servicing. If I can have an advisor, because technology is just so great now, being able to service 500 clients rather than 150 clients, certainly not the 8,000 that we mentioned earlier. So it's, but from that perspective, that's what I want. That's what I'd be using that cash for. Why to go out there and acquire something at 3 times multiple just doesn't make sense to me.
Well, I think extra capital for us. I mean, even I was talking to a capital partner the other day, and they said, "Do you need more money?" And I said, "No." Sorry, I'm not going to knock it back, but actually, we'll literally just sit in the bank account doing nothing. Because, and they agreed. They said, "I think even if we released our first software product last year, and we would not have built it any faster if we had any more money. It would have actually just been more people bumping into each other."
But on that basis, then, if we go back, you guys launched in some pretty turbulent times. I mean, there was the takeover attempt. There was the pandemic. Faced a few challenges, and you got to this stage. So, I mean, it hasn't just been. You know, everyone sometimes looks at the end result, and don't actually see the hard work of getting there, and all that work. And sometimes the wake up gasping at 3 a.m. saying, "Oh my God, I forgot to do that." I nearly swore, but we don't edit. It's
Yeah, the 20-year overnight success, I think you call it. And every company you talk to, I think it's the same story. There's things below the surface you don't see. And even for a lot of businesses, the idea starts well before the business does. And so going back a bit, you're right. I mean, so our old company that we sort of effectively had to rescue, we did try to buy it. That was a thing we tried to do.
Yeah.
So we had a management buyout, which I have to say was one of the strangest experiences I think I've ever had in my career. Buying a business that you sort of felt like you owned already, but you were buying it off a purely financial objective board. It was an ASX-listed situation. So very quickly we went from being, part of the team to on the outside in a competitive process. And it was in the pandemic, so we didn't know what the world was where it was heading. I mean, that was literally when things just started ramping up.
Yeah.
My first son had just been born actually around that time as well. So, and we just finished renovating a house. Talk about sort of degree of difficulty. It took an enormous mental toll on me. I think I didn't realize what it really was.
Yeah. Benefit of hindsight. Yeah, I agree.
I could shoot. But what I would say was it did sharpen our thinking. And two best bits of advice I got from a pretty good mentor now was that never buy yourself was the first bit of advice. So this is a common trap. I think most people fall into a situation when they're trying to buy out a business is they feel like they've got to almost pay for the work they've already done themselves over the years and not back themselves in. So the logic there was, well, look, if you're as good as you think you are, maybe rather than spending millions of dollars buying something that is pre-existing and all the legacy that comes with that, why not just start with a clean sheet of paper, see what happens? I thought, well, that's good advice. Yeah, okay. That was the first advice. And the second bit of advice was about people.
Otherwise, yeah, just thinking about that, otherwise you would have been doing like the firm that we're just talking about is doing.
Yeah.
You're just building on top of the legacy. And I remember speaking to he's now passed many years ago, but he was a client of mine who was at the time the CTO of Telstra. He's an American guy. And he said, that technology is just so old and archaic, and basically it's held together by sticky tape and elastic bands. It's just built on top of, and this was before 2000.
Yeah.
So, 25 plus years. So everything was just built on top of all the way through.
Technology is a depreciating asset, contrary to what the valuation model suggests that it is without further investment. So for us, it was about, firstly, don't pay for ourselves as business owners. That was the first thing.
A bit of advice.
The second thing was get the priority right. So you might think the early days, the priority was to win clients. It actually wasn't. The priority was to win enough clients to be able to go and hire the staff we wanted to hire. That was the business plan for the first 2 years. So we knew the team we wanted. We'd worked with them before, and so we had a list of 5 people that were our key people. We communicated with them all quite openly about we'd love them to join at the right time. But I said, I need 6 months to go and find a bunch of clients for us to work.
And a new baby and renovation happening at the same time.
All this stuff happening at the same time. But I wasn't alone. I had Aaron with me as well.
Yep.
And so that's what we did. The business plan was really simple. We just said, let's go and find enough clients to be able to hire that team in. We didn't pay ourselves for the first couple of years. So a big thank you to our wives for keeping the family finances going. But that was the short-term priority. And look, without those people, we wouldn't have a business. They're all now shareholders in our company, which is awesome as well.
Yeah.
And so that, I know a lot of people say, what's your business plan? But really the business plan was to hire these 5 people.
Mm-hmm.
Simple as that.
But that is a magnificent story about scaling a business. So once again, we've seen it before with founders who get a big check and they go, actually, Steve Bartlett, the Diary CEO, spoke about it when he got his first massive check and then went and signed a 15-year lease on this property in Manchester to house 150 people. At the time, he had 19 people, but that's what he was going to grow into. And because it's so easy to do with other people's money. So when you're actually doing it on your own all the time, you like we've always had a rule in here, is that I don't have an overdraft, never have had an overdraft, and I don't have or like debt. Pretty simple. And from that perspective, it's, and we have bought businesses in the past where we've borrowed money, but, even though Westpac, wonderful Westpac, have always said, "Oh, we'll give you 3 years. You don't have to worry about capital repayment." I said, "No, 10 years, P&I right from day one, and I'll repay as quickly as possible." Oh, but then you'll have retained earnings in your balance sheet. And I said I prefer to have retained earnings on my balance sheet than to owe you money.
Yeah.
So yeah,
Better than retain losses.
exactly right. Exactly right. Yeah.
Yeah, and I think for us, I mean, technology is a capital-intensive business. I would say that, but one of the things that I think, and I'm sure
Well,
other
great
things,
people that come to work with you don't, in technology, they're not cheap. But as you said, so it sounds like a few of these people decided to take the bet with you, and our shareholders today as a result.
I mean, they all get paid fairly, but I
Yeah.
think what we did do as a business, I mean, one of the benefits of starting a business in the pandemic was there was no rent,
Yes.
and there still is none today.
Mm.
In fact, the only rent I pay is $400 a month for a little bit of office space that I still rent.
We officially had day 3 in here. So we signed a lease 8 weeks before the pandemic started and officially had day 3 in here when first lockdown happened.
Lots of
So
stories like that.
everyone came in and we packed them all up with their laptops and sent them home in taxis.
And that, I guess, that financial frugality has probably carried through the business
Peter,
somewhat.
the problem I have is I'm still paying pre-COVID rent.
Yeah. Well, your renewal will be excellent when you get the renewal
Oh,
opportunity.
yes. I have spoken to them. Yes, given a pre-notice.
But I think it is a good lesson for. I think I look at a lot of startups getting funded now because of the AI boom that's we're flipping through, and they're getting a lot of cash. I can assure you, if we put if we put .ai in the name of our business name, we would get a significant valuation bump. Even if we just claim we were doing something with AI, we're not going to do that.
Like the original tech boom and tech wreck.
Yeah, just .com everything.
That's right.
But that, I think a lot of startups, I see it all the time. They get the fancy office space, they get the zip taps, everything just gets thrown on, and that's not a company that has a true mission and purpose worth doing. Isn't spending money on soda water taps.
Correct.
It thinks about things in a very different sense, and so we were always built. So we were initially bootstrapped. We got some external capital to help us accelerate the development side of our business, but that's where all the money goes. So every other little decision, we are every month pouring through all our subscriptions and everything we do to make sure that every dollar is getting squeezed appropriately.
Yeah.
In that sense. Yeah.
But then moving forward, how do you actually see the development, say, with AI?
Mm.
So AI development, workflows, automation, data analytics. It's fairly exciting.
It's really exciting.
Scary to some extent, but of course, it's. I'm excited by it. It's this is the opportunity to be involved in a boom where I might have a few dollars to actually be part of it. Whereas previously, when the tech happened, I didn't have much money to actually spare to go and do stuff.
Yeah.
Once again, benefit of hindsight, I would have bought those Amazon shares.
That's right. That's right. I mean, I think there's a few things that are exciting to me. I mean, obviously, the accessibility of AI is probably the most exciting part for me, that pretty much anyone listening to this podcast can have the ChatGPT app on their phone and do things now that were never possible 4 or 5 years ago. That's been wonderful. I think AI is a wonderful leveler. One of the things I do believe that's great about tech is that it doesn't matter who you are, where you grew up, what your education level is. As long as you have access to the internet, you can now learn the world. I mean, I remember my parents bought a set of Encyclopedia Britannicas when I was at school, and that was a competitive advantage. They had those, things at home, which God knows where they are now.
No, my mum gave them away. They were the only things my dad left to me in his will. And she gave them away about 4 weeks before he passed away. I said, are you kidding?
That access to information is no longer, and nor should it ever have been like that. So I feel like that's the exciting part with AI.
Yeah.
I still think, as we are grappling with it from an organisation, a society point of view, in the sense that there's increasing research coming out. MIT released a report last month that spoke about that only 5% of AI projects in large companies were delivering on the expected benefits. So there's, like all technology innovations, there is a human element to adoption, and there's still a lot of conscious and subconscious resistance to implementing AI. But
Sorry, it does remind me of a meme where there's Elon Musk and Barron Trump. And Barron Trump's very stoic, sitting there, Elon Musk is dancing like this. And it's just like the tech salesman, the engineer, and he's just like, sorry, you've told us we're doing what in what time frame on what budget? So it's yeah.
And it is very easy and tempting to slap AI now with AI sticker on old products, and everyone gets excited again. And there's a bit of that going on. I think from a capital point of view, yes, there's been a lot of investment in this technology. There's a lot of money looking for a home with AI. It's part of this theme. I think you can see emerging evidence, though, that a lot of the value creation is going to happen from the top 6 or 7 companies in tech in the world. That's really where the muscle is. The one thing that's probably different with AI that's less understood is that it is a war of capital, because if you do not have the capital to buy all these GPUs, which is why NVIDIA's share price is as high as it is, you're kind of out of the game.
Yeah, they're not cheap, are they?
They're not cheap. And it's quite political who they sell them to now. There's a lot of geopolitical issues over these GPUs now. And I did read within an Australian company is looking to build an Australian version of ChatGPT. Maybe you've read this, but and so they're raising $100 million.
Okay.
Do it.
Decent first raise.
Decent first raise, but never going to get it done.
No.
And so you are chasing something that is just so far ahead of you that I question the value of that. Like all
So
things,
is that like me coming up with an idea and saying, Peter, have you got a spare 100 mil because I'm going to launch another version of Facebook?
I feel
It's
like
just
it
like,
is.
but why?
And the one thing we're learning is you talk to people who use ChatGPT or who use Claude or Copilot, all these things. It's not the AI that's actually the valuable part. It's the packaging of it. It's the way it's used. And so I don't necessarily feel that a made in Australia large language model is what the consumer is really looking for.
No one would understand it. Australia, mate.
And then there's also it's safe, all these sort of things like that. I think Amazon will have that covered pretty soon. And so I do anyway. So like every hype cycle, there's going to be some great ideas and some not so great ideas. But I'm a big believer that I think the big tech companies, I think Google's the one that's got the most to gain in all of this.
Very much so. And they've got the cash to be able to do it. So if you could actually look at one major change in the fintech sector from your perspective and for our industry, what would that change be?
I would love more.
Right now, from where we are right now, obviously.
Yeah. I mean, look, access to information is a really challenging thing for advisors. Getting information out of clients, sharing that information securely, and doing it in a safe but also real-time way. There is
the mortgage broking industry do it well.
They do.
Yeah, but it's interesting. The mortgage broking industry seem to have done a few things well, including fighting government, but our industry can't seem to actually get around to doing that.
Yeah, I think the mortgage broker, I think the aggregators have invested a lot in software and technology. The average licensee in Australia doesn't do that. But I think the big one is that we have access to a system in Australia that everyone uses now, whether you like it or not, called MyGov, which now has all of our data. The ATO is the biggest, spending more money on AI than the other organisation in Australia right now, for obvious reasons. They're the most paying by finding out we were hiding money. And so
I actually heard there's $100 billion in outstanding tax debt right now. Yeah, and the ATO saying, it's not COVID anymore. We're getting that money back.
Yeah, and they're using AI to find that money.
Yeah.
And the reality is that I think for advisors, what we need to do, and we have not done this well as an industry, is we need to be able to empower consumers to share that information with us more efficiently.
Yeah.
That will save a lot of mucking around getting clients to send us things. It's all there. It's on MyGov.
And what's interesting, even from an advisor's perspective, we can't get access to the ATO portal. The client actually give us permission and we can't get access to the ATO portal even.
Yep.
So we have to then contact their accountant to get the tax returns sent to us, or to get information even in respect to, the carry forward concessional contribution. These just really simple things. The accountant then sends that and the accountant has to bill the client.
Yep. It's a lot of things that
sometimes they don't, but the point is that could happen.
Absolutely. Even with ASIC, we spend a lot of money on company lodgements, company registrations, just taxes, in my opinion. On things. Accountants have to spend hours on the phone for ASIC these days to do simple things like share reallocations. It just makes no sense. So I feel like there's a lot of things we can do to help advisors to say, look, I as your client, Tony, empower you to access my safe information on MyGov, to use it for your systems to give me advice in a more efficient way. Is there changes to
that's talking about that live SOA. Okay, so let's look then at the next generation. So, it's I always say I'm a sprightly young 56-year-old. So I've been 33 years in the industry now, coming up to 34 years. I did start as a young fella, like Gus. We started as young fellas. I think I was a couple of years older than him. So it was, but the you've got a new generation going through that, okay, there's a few people that shouldn't be doing YouTube clips and TikTok clips and things like that because they're actually not licensed to give advice, those influencers. But there is a new generation that we are, looking at things like, for example, podcasts, like what we do. I mean, we never talk about product on our podcast, as you know. We interview clients and people that we work with and suppliers, etc. But from their perspective, when you've got YouTube, TikTok, Meta, all the adverts and that coming out now. It's how do you see this new generation working with, say, or compared to, say, some of the older generation? Like, I hate to count myself in that group, but yes, the older generation.
Yeah, I'm seeing,
or older professionals, as I call us.
Yeah,
Yeah.
I am seeing more younger and not
By the
always.
way, I'm not suggesting that they're not professionals. They are professionals, but there are. I've often said sometimes a few of the scars that we carry from the GFC and from the tech wreck and things like that actually do abode well in respect to making financial decisions because everyone's an expert in a bull market. You throw a dart and it just goes, whatever it lands on, it goes up in value. But when you've actually got all the scars, you don't get distracted by the shiny things as much. So, I mean, but from that perspective, there is a completely different generation is, well, why do I need an advisor? I can do it myself, go online, etc., which is fair, which is fair enough as well.
I think it hasn't been helped by the fact we've been in a bull market for many years now.
Yeah.
I can't really remember the last proper correction we had, COVID.
Well, we had that lasted a one-day correction, then
one-day
bounced back.
correction, and then one of the greatest rallies of all time after that.
That's right.
So I think, and I started the industry,
especially in your industry, actually, the tech industry.
Yeah, I started just before the dot-com boom. I was in an advice firm doing a paraplanner when the 9/11 happened. I was in the industry during the GFC. So I've seen all these things. And I think younger people
could dance a TikTok dance in a bikini.
I don't know. I mean, you have some good people around you, Tony, that'll help you tell you probably what not to do.
Yeah, I hope they tell me not to do that. So we've engaged a marketing team, and Lisa to date has not told me to wear a bikini. So,
but I've seen some wonderful.
She's a swimmer as well, actually. So.
But I think there's a communication style, and I think the things that resonate are that short form content has relevance, and why not educate and talk to people in a way they want to be communicated with is probably the key lesson there. So rather than avoid it, we are big advocates for advisors embracing it. Don't be something you're not. But at the same time, as I said, people are not going to jump off TikTok to spend an hour looking at your educational course video that is on some old platform that's really old to use. That's the reality of 2025.
And it's interesting you talk about the instantaneous gratification. I was approached by a magazine to do a podcast and interview 6 months or so ago now. Inspirepreneur, they're called. And I said, we've got 60,000 subscribers, looked them up, they're legitimate. And they came and they filmed the podcast. Now, I did look at it and they had some really good guests and things like that. So I looked at the podcast and I thought, okay, they do a really good job. Usually went for about 35, 40 minutes. So they came here, set it all up, did a magnificent job in the filming. The editing was magnificent in respect to some of the snippets they put in there. And went for 2 hours and 30 minutes. And she gave me 10 questions prior what she was going to ask, but every time I answered, it sort of led down a rabbit hole into something else and something else. And so I said afterwards, I said, geez, you've got a lot of editing to do there. And she goes, I'm not editing any of that out. And the finished product went for 2 hours and 22 minutes. And it was just like, wow. But one of the things that's shocked me about it was they did all these little 15-second snippets, which they put out, like half a dozen of them. 374,000 views. But they linked it to my personal Instagram account. The amount of approaches I was getting, I thought, geez, it's a...
And unleash the bots on you, Tony.
Yeah, that's right. So I was just getting inundated with all these friend requests as well. And it was just like, no, this is my private account. So, but it was interesting because, I mean, if you have a look at James Wrigley, he does a magnificent job. He does, and I actually love his little 30-second snippets the way, and and the results they've got from him has been tremendous. But he's had great growth. I love just the way he does it, very natural. James will never wear a tie. You'll never see me without one Monday to Friday. So, but once again, congratulations. So he's that newer generation with experience. So he's got experience on his side, but he's done a magnificent job as well.
Yeah, and I think I've been very critical publicly of, I think super funds do a terrible job at educating members. They think they can sponsor a sporting team or stick a sticker on a tram is going to educate people. It doesn't work that
So
way.
we're talking about the same funds then, yeah.
There's those things. I think the professional associations...
But they've never had to service members.
No.
They're mandated by law to grow by 12% virtually every single day, every paycheck. Yeah, they actually don't have to educate the members. So, because most people wouldn't even know what their balances are where they're invested in those larger funds.
Yeah, and the big companies are going to do this well.
Yeah.
I think, even the industry associations like the FAAA have done a terrible job trying to educate the community on what advisors do. No one really knows. So I think it's up to advisors to use their personal megaphones that we now have in our pockets to say, this is who I am, this is what I do. It's not going to be for everybody. And all James is really trying to do is put out to the world that this is who I am, this is what I'm about. And the people that like that will like, and the people that don't will move on.
It was funny. I don't know James personally, but I do love his content. And I did see one where he put this post up where he got bagged out by some guy and saying, you talk about this crap all the time, and property is the only way to go, et cetera, et cetera. So someone's actually made the time to that and then said, by the way, you could clip that nose hair of yours or the nasal hair of yours. And I just thought, wow. So I actually zoomed in. I thought, seen him nasal. So I sent him a private message saying, James, by the way, as a fellow professional, I love your content. I did zoom in. I didn't see any nasal hairs. But it's just like people who will make those comments. And we did get told by Lisa from Cody Agency that you will get a bit of hate mail. So it's you just have to be aware of that.
You're not trying hard enough if you don't upset somebody.
Yeah, I'm actually quite good upsetting. Yeah, so it's I think like yourself, I do have the, in this industry, I say it how I see it, and some people don't like. So I said I either have some really good friends or people that avoid me if they were at a conference. It's either one or the other. So it's let's talk about outside work. If you sit on boards, you're growing a business, which is always growing as well. You've got a young family. What do you do outside of work just to recharge a bit?
There's not a lot of time, I'll be honest.
I know you don't play golf,
I don't play golf,
which is a good thing because you don't. That's 5 hours not wasted.
Yeah, I mean,
sorry to your father-in-law.
Yeah,
I know he likes to swing at clubs.
Graham would love to have a son-in-law like me who plays golf. Fortunately, his two sons do play golf. No problem there. But Graham's a member of some great golf courses.
Oh yeah,
they're wasted on me. But look, I make no secret about it. I mean, you're right. There's a lot on my plate. I've made that active choice for myself. My two primary jobs are running my businesses, my boards, and being a dad and a husband.
Yeah,
that's it.
Yeah,
I really don't have much time for much else. So I don't.
Yes.
So I do coach footy teams on the weekends. So I coach Auskick every day at the Ascot Vale Panthers. Go Panthers. So I coach. That takes a big chunk of my winter.
They're still in the Essendon jumpers, Ascot Vale?
They are. Yeah, they are. So I coach on Saturday mornings, and this year I coached my son's under-8 team as well. So that kept
I did read somewhere that you said not a very good junior AFL football coach.
I'm very unqualified. I've done
that was the word that was used.
I've done all the courses, but I never played the game. I'm a rugby union player originally. I'm from Queensland originally.
So you can teach the boys how to tackle well.
Yeah, tackling was actually one of our great traits as our under-8 team. We had a bit of a reputation for tackling. Nothing to do with my change, as the kids just seemed to be very good at it. So I actually tried to not refer myself as a coach, but more of a player welfare manager is how I described it, because anyone who's got kids knows at that age, they learn the skills. That'll all come.
There's 36 kids chasing a ball. Don't worry about positions.
It's teaching them the mentality. It's teaching them to be good teammates, respect the opposition, respect the umpire, be consistent, show up and have fun. I mean, they're the things that kind of matter. And so maybe by some strange twist of fate, me having no AFL experience probably set me up for that, because I had no preconceived ideas about how the game should be played. I just want the kids to have a great time. So back to your original question. I really, they're my main jobs. In terms of how I uncharge, recharge, whatever you want to describe it, I do stay quite active. I lift weights a lot. I love, if I can get 25 minutes in a sauna, they are my best times of the day. So I go to the sauna down at the Ascot Vale Leisure Centre and sit in the sauna with a bunch of old Greek blokes.
Laps in that pool.
Yeah, and it's still great. I think my father-in-law used to go there too. So that's where I hide. Tony, if I have a sneaky half an
All
hour.
the jockeys around Melbourne Cup time are always down there as well. So a guy
And
I
you
went to school, John Diddham, St Bernard's boy,
there you go.
he's always down there having a sweat.
Yeah, so the jockeys will
He
be
lives in
there on
Escobar
Saturday
still,
morning,
John.
and they'll be wearing all the garbage bags around themselves, and they'll be scraping their skin. It's quite gross, actually, when you think about it. But then all the old blokes will come in with their newspapers. I don't know how a newspaper works in a sauna, but they're in there, and they're talking to the jockeys.
Mm.
So it's this whole exchange of tips going on. It's quite a scene on a Saturday morning at that sauna. So
Well, I go to the Fitzroy swimming pool, so it's and I go to the sauna there, and the conversations are far different.
I'm sure.
Very, very different, which I cannot tell on air. But a few people have heard those, and what I often say is, thank God, because there doesn't seem to be any volume control or filter, and thank God people, because you're in a sauna and you just read anyway, they can't see me blushing.
Yeah, that's right.
Just this old man blushka.
Yeah, but I think that whole balance thing. I mean, I'm not advocating for hustle culture, whatever they call it. But I mean, my schedule's pretty simple. Like I work most of the day, 5 till about 8 o'clock's generally family time. So I'm a pretty active dad. My wife has a very senior role at one of the big law firms, so she's pretty busy. Far more important job than me, I think. And so
she took up her father, did she?
She did.
Yeah.
Yeah.
Okay.
And so I tend to do that nighttime stuff with my kids, and I love that. And then I'll tend to work quite late at night. And look, that's how it's going to be for the period of time for me. But I love what I do. Like I wouldn't do it any other way. And what I would say is I got some good advice a while back is that you can have it all, just not at the same time. So if you want to have all those things, the growing business, the interesting roles, and you want work-life balance, it's just not possible.
Well, it's a furphy.
Yeah.
Put it bluntly. So it's and I understand. I love history, and the 888 was brought in by the Scottish Unionists to start with.
Wow.
8 hours of work, 8 hours of sleep, 8 hours with the family. Tend to just be 8 hours of work and 8 hours in the pub, and then 8 hours of sleep for the Scots.
The family was a grey area.
Yeah, that's right. So when it first came in, but when that was first brought in, you had Carnegie, who used to have he still works would go 24 hours a day, 364 days a year, 2 shifts, 12-hour shift and another 12-hour shift. So you had the night shift and the day shift, and the only day that didn't go was Christmas Day because he decided that was the day where you should be with your family.
Yeah.
But so you understand sometimes, right? But when you're in charge of your own destiny, you do what you have to do.
I think so. And the only thing I would say is for all the, it might seem like a hard thing. At least I don't have to go to meetings I don't want to go to. I don't go to conferences I don't want to go to. Like I do have just choices.
Yes.
And so there are things I say no to all the time. So, because I want to be home with my kids. And so I think there are people I know many senior executives of very large organizations that probably make a lot more money than I ever will. But they're pretty miserable because they don't have the luxury of saying no very often.
Yeah, very, very true. That is very true. It was interesting that I just spent 3 weeks over in Europe, first ever solo trip by myself. So, I mean, I've gone overseas for work by myself, but always meeting up with other people. So this was first solo trip, didn't know anyone. And it was fantastic. Absolutely loved it. And it was interesting because there was a rule in here that you call me only if somebody's died. It's a case of, I'm on holidays, I'm on holidays. But I used to do some emails that sort of snuck through that I would just clear and just send to the appropriate people in here. And, but it was funny because I found out the other day, Boyana in here, she was told, no, just ghost Tony. Ghost him. He's on holidays. So it's, do not respond.
Yeah. I had a holiday.
Actually, Bella did respond to one of my emails. I said, why have I been invited to the Myers Foundation breakfast? So I'm thrilled to be an invite, but why? I said, Matthew Reid is presenting there as invited. I said, I thought they were reaching out to me, but okay, I'm still going. so I did. She did respond to that one.
Yeah. I mean, our business, our little business, Finura, we have we have an internal WhatsApp, company WhatsApp, which to the staff, which is where we put all the inappropriate banter that we want to have. And so when I was on holidays,
I was down HR. So
there is no HR manager, and but I was posting family updates from my family holiday recently, and we all do that, and because we're kind of friends outside of work, like we do, and so I think that whole unplug thing is good. So the real thing for me was unplugging from email, which I did on a family holiday recently, which was awesome. But still, still think when you run your own business, it's you're never completely unplugged. You still have responsibilities. You're a director, so some finger on is not always a bad thing. Because to be honest with you, Tony, I'm the kind of guy who, beside the pool, worried. If I don't know what's going on, I'm a bit like, oh, I'm thinking about it anyway. I may as well just know. I know it sounds strange, but
no, it doesn't sound strange at all. Yeah, does not sound strange at all. So it's I used to be like that.
I'll spend more time worrying about not knowing than if I just know. Then the anxiety goes away, if that makes sense.
I just realised that the team in here, Peter, are far better than me anyway.
Well, that's different.
It's I just seem to get in their way all the time. So right. Well, nowadays anyway. So it's I did get asked once by one of the team members in here. Actually, it was Vaughan, Tarley, and myself all heading off to the tennis. We got an invite by Cooper Investments to go to a dinner and then to the tennis. Vaughan asked a question to me. He goes, "So when do you think you're going to retire, Tony?" And I said, "Well, when I'm not needed anymore." So Tarley said, "Are you retiring today?"
Yeah.
So it's just like, well, that's a bit rude, but no. But it was a compliment at the same time, in some way. So it was a good compliment. Last question. I'm going to say second last question, actually. So second last question. If you had to do a prediction on whether it be wealth, fintech, or whether it be technology in general, just in 2026, I'm not going to talk a decade in the future, because if we spoke a decade ago, we would have all got it completely wrong. But just in 2026, what do you think is going to be, whether it be fintech or in tech in general, or both, what do you think is going to be a sort of a big change or a bit of a game changer for, we'll just talk, say, Australian society or in general, or however you want to answer that?
Well, I'll answer one industry-specific question. I'll give you a prediction, a broader one. So the first one is I'd say that in the financial services industry, we've seen the emergence of two very large technology platform players in Hub24 and NetWealth recently.
Yeah.
So this is now becoming preferred partners by many financial advisors, and the platform market's enormous.
Yes.
So they're businesses. I believe there's a lot of people being quite stunned and shocked by their growth. And I think that's going to accelerate at a pace that's even going to surprise people who, in more recent times. I see Hub24 and NetWealth being the two absolute dominant players.
Michael and Matthew Heiner, I've always had great relationships with.
They just
admire them so well.
Yeah. So I think those.
Matthew has really grown into. I remember when he was 15 when I first met his father. So it's but he has just grown into such an amazing leader.
Yeah, those two businesses are very focused on what they do.
Yeah,
they're run, despite the fact they're large ASX companies now, they run lean. They run like entrepreneurs, and I think they will continue to accelerate their lead against the bank-owned or previously bank-owned organisations. I think it's just going to go straight up.
Well, one of the current bank-owned organisations realistically has not updated their wrap platform since they launched it.
Yeah, right.
Which should be 20 plus years ago now.
Yeah. So I think
same interface, pretty much.
Yeah. So it's more of a less of a prediction, more of a trend accelerating. The next one, I guess, is around tech for AI. I think we're going to see next year the first real consumer AI products emerge. So what I mean by that is that we are seeing a lot of money now being put aside for less about software AI and more about hardware AI. The technology sector has been, since the iPhone and maybe the Apple Watch, we haven't really come up with a new class of product that we can sell people.
Yeah.
So OpenAI recently did a deal with Johnny Ive's company. Now, if you don't know who Johnny Ive is, he was the guy that was the designer of the iPhone. He was Steve Jobs' right-hand guy for about 15, 20 years.
Yep.
He had lunch with Steve every day. And so between him and Steve, they were behind all of Apple's great innovations. So they've done a deal together. And the express objective of that deal is to build the world's first consumer AI product at scale. So I don't know what that's going to be.
Microsoft have finally got a bit of a dig at Apple.
Yeah,
if you have Microsoft's $10 billion investment into
absolutely
OpenAI and Johnny Ives, who was Apple.
Yeah, so we're already seeing some pin-style devices and things emerging, things you can stick on the back of your phone. They'll just record everything that happens in your day. But I think the next sort of iteration of wearable technology is going to hit us next year, where there'll be AI glasses that just record everything we see all the time. So the only way we're ever going to justify all this AI investment if we can convince people to part with their hard-earned money to buy something just other than their iPhone. That's to me is the big
Or
one.
just an update of the iPhone.
Yeah, all that.
The next update. Yeah.
Yeah.
So
I think it's if Apple actually can get their shit together with AI and Siri, they have a massive fail of recent years, and I feel like they will get it right.
I think they've really missed the boat with Siri. I think when it comes to OpenAI, I just Siri should just be so much better than it actually is.
Yeah, I mean, I have a Google phone,
Yeah.
and the only reason is because the AI is so much better. I show my wife what I can do with the Gemini, and it pretty much can run my whole life on the phone. It's amazing.
Yeah.
It knows all about me, and it's what Siri should be. But the reality is that most people use an iPhone. So I think when Apple gets that right, it'll be the first time everyone will get access to great AI and see what it's capable of doing. But even the ability now, Soundcore, one of the companies that makes earpods, is now developing a little pin. It's about the size of a 10-cent coin. You can pretty much just pin it on your shirt. It'll record everything all day long. And there's a little web application that you log into on your phone and it'll record all your meetings all the time. So we are heading into a whole new world, Tony.
Peter, actually, that reminded me of something that I was told 30 odd years ago. I got brought to a conference and the guy, it was a young gentleman's, it was actually a friend of mine who's now a church pastor, but he invited me along. But it was, so basically just young men's group. There was about 40 of us there, or 50 of us there. And the guest speaker was one of the Apollo 13 astronauts. That was the mission that nearly failed and everyone nearly died. Tom Hanks was in a movie about it. So he was the guest speaker. And what he spoke about was the fact that when he was an astronaut, they were more popular and famous and had more groupies than the rock stars or the movie stars at the time. Yeah. So the thing is, though, is none of us had any game because we're engineers. So we weren't Tom Cruise pilots; we were all engineers. But he made a comment. He said to the young guys, he said, "If you want to live your life well," and this has really resonated with me. I haven't always passed that. It might have failed a little bit every now and then. But one of the things he said that really resonated was, live your life like it's a movie and only two people are watching, your wife or your girlfriend and your mother. And I just thought, wow. In other words, would I say what I'm about to say if my wife or my mother was sitting beside me? And if I wouldn't, why am I putting on all this front now? And it's just like, that really. So when you talk about the little 10-cent coin, you put that on your kid going to school. It's or whatever the case may be. But it's just like everything is now being recorded.
Yeah, and I think it is like the reality is,
and every bit of that recording has been stored. Whereas I grew up in a generation where we could take a photo if we didn't like it, we could destroy it, so it doesn't come out like Justin Trudeau's blackface photo many years later.
Yeah, I think, and that's a reality we have to grapple with. And I just think no matter where we go now, someone is recording. We will
hopefully it means some people will be far better behaved.
Yeah, perhaps, or just more transparent.
Yeah.
And I think, and this is this whole issue around AI. It is just really equalizing access to information, and we just have to get really, really comfortable with that because we're not going to be able to control now who's recording and who's not.
Yeah, very much so. Last question. I know you're a rugby man, but who's your AFL team?
Western Bulldogs. I'm sure that comes as a huge shock to you.
Your son plays in the red and black. How's it not Essendon? You want him to go to St Bernard's, don't you?
Well, yes, of course.
Is he an Essendon supporter?
No, he's very much a Western Bulldogs.
Oh, he's going to get bullied every day. He's going to get bullied every day if he's not a Bomber fan.
Yeah, no, so Tommy was
St Bernard's is a good school.
Tommy was born the year after Western Bulldogs were the premiers when Tommy was born in 2017. Probably conceived shortly after the premiership from memory. And obviously, and so my father-in-law's got a very long history with the Western Bulldogs.
He does, yes.
And when I moved to Melbourne from Queensland, I didn't have a footy team. I wasn't a Brisbane Lions supporter, and I actually lived in Yarraville. It was the first place in Melbourne I lived, and I distinctly remember in
slowly forgiving you a bit then.
Yeah, so in 2013, I remember getting a train home to Yarraville from Marvel Stadium. I'd been to footy with my now wife, Catherine.
Yarraville Football Club were Geelong jumpers. from memory.
Do they? Yeah, I didn't go to that ground. But anyway, we were on the train full of Western Bulldogs supporters, and the Dogs had just beaten Richmond, and there was a fair bit of rowdy behaviour going through Footscray. And as a Queenslander, a lot of it felt very familiar.
Okay.
And I thought these are my people. It's kind of strange. It felt very at home with the Dog supporters. And look, as I found out from being in Melbourne through 2016, a lot of people are quite happy to see the Dogs be successful. I think a lot of people, except for Essendon supporters, have a soft spot for the Dogs.
We don't despise them.
Yeah.
They're not Carlton, Richmond or Collingwood.
But equally, as I've had to teach my sons the last couple of years with the ups and downs of a very talented side like the Dogs, is even all the talent in the world doesn't necessarily guarantee you results. So, yeah.
Diehard Essendon supporter who my nearly 29-year-old son, who I always buy the memberships every year, and we go to all the home games together, and he still said, you still keep going on about those glory days that I can't remember because I was 4. No, so it's I was 4 or 5, and he said, damn you for making me support this team. And I said, what was your other option, Carlton, with the in-laws? Yeah, so I said, mate, seriously. But it was funny because when he was actually born, my ex-father-in-law, he said to me, he's a Lebanese guy, great guy, Victor, and the kids call him Jiddu, which is grandfather in Lebanese, and Josh was the first grandson in the family. So third grandchild, but first grandson. Yep. And Victor said to me when he was born, he was tears in his eyes, and, I've got a grandson. And he said, so, Tony, I suppose he can't back for Carlton when he gets older. And I said, Victor, he can back for any team he wants. Yeah. But if it's not Essendon, he leaves home. So Josh has held that against me, and he reminds me of that, so every year. But I said, what's the other option, Carlton? You're still going to be miserable.
It's a wonderful part.
Maybe a little bit less miserable, but still miserable.
Yeah, but look, it's a wonderful part of the culture in Melbourne. It's certainly very distinct from from being new to Melbourne. Well, now 13 years, but I still distinctly remember being there for the 2016 grand final. It was, I got married that year, and yet my wife and father will agree that as good as the wedding was, grand final day was still the best day of the year for the family, and that's okay. Even Catherine agrees with that.
She's a Bulldog fan?
She is, she absolutely, yep. And we all are, and so we still remember that day.
Knowing Graham, none of you had choice.
We never choice, and we were all there that night. We got to celebrate with the players, which is a really unique privilege that we were able to do that. So we'll have some wonderful photos from that night, but obviously, any footy fan, you want that, for anyone.
Absolutely.
And I'm sure the Bombers will have their day eventually.
I was a record boy, and so I used to sell the records as a kid. 83, 84 and 85 grand finals I got to see for free, because what the rule was back then is I was record boy down Windy Hill when that was Essendon's home ground. And what happened is if your team made the finals, all the record boys from that, so whether it be Victoria Park or Windy Hill, got to sell records at either Waverley or the MCG. So, 83, 84, 85, I got to see all the finals and the grand finals. 83 wasn't much fun. 84 and 85 was, I was old enough to be able to jump a fence and sneak into a bar and have it tall enough to have a drink, underage, and go home drunk. And my parents would say, you drunk? No. So, but it's, no, good time. So AFL is a wonderful thing down here. And, I can't say I don't really like the Western Bulldogs. So there's a couple of Melbourne teams I don't mind, Melbourne and the Western Bulldogs. And it's and then all the Melbourne, all the CBD sort of supporters and suburb supporters. We didn't mind Geelong because they weren't part of the CBD. They were outside.
Yeah, although at the moment I am finding Geelong a bit tiring. Their sustained success is just becoming a bit tiring, I think. But I tell you what, if you can ever get him on the podcast, I would love to know what Chris Scott's doing. Whatever they're doing down there, they need to bottle it and sell it, because there is something going on in that culture.
I might get Lee Ilafrati to try and get him onto my podcast so I can get him to give his brother a few tips. Yeah, his twin brother, because his twin brother at Essendon. Okay, let's. I'm patient with him. I like Brad, but his brother's been far more successful.
Absolutely. They're the blueprint.
They are very much so. Peter, thank you very much for coming in. Really appreciate this today, and looking forward to working with you again in the future.
Thanks, Tony.
The Kofkin Bond podcast is a product from Kofkin Bond and Company, which we are an authorized representative of Count Financial. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional, finance, legal, or tax advice. The hosts of the Kofkin Bond podcast are not aware of your personal financial circumstances. Before making any financial decision, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. Do not take financial advice from the podcast. For more information, head to the disclaimer page on the Kofkin Bond website, or you can find resources on the ASIC website and find a registered financial professional near you. In the spirit of reconciliation, Kofkin Bond & Co. and the hosts of the Kofkin Bond podcast acknowledge the traditional custodians of the country throughout Australia and their connections to land, sea, and community. We pay our respects to their elders, past, present, and extend that respect to all Aboriginal and Torres Strait Islander people today.